Good morning, everybody. It is Monday, March 21st. Just been up watching these markets, doing a little trading. And I wanted to talk to you a little bit about a pattern that I'm seeing in the market and just create a talking point for us about the possible reversal of trend. I know a lot of people are speculating on a market crash, and it's easy to get caught up in that fear. But let me show you how the pattern that we see here on these charts is indicative of the institutional behavior. What we have is we have an institutional footprint that signals to me possibility of reversal. Now, the signs of this is the chart of the S&P. We're on a daily time frame. And what we see is a general slowdown out here in consolidation. So this general area we see is kind of a topping action. And that's been confirmed by a breakdown. And I'm going to bring this in a little bit closer so we can get a good look at it. Okay. What we see in here in this consolidation is almost a symmetrical type triangle. A couple different patterns will pop out at me. Some people would call this an M for murder, and that's a topping pattern. I personally would look at this and say we see we had a symmetrical triangle form at the top, and it broke to the downside. When that happens on symmetrical triangles, typically you can get a pretty symmetrical break to the downside. And we can see where support came in down here. And we have this nice strong rally up. But we don't trust this rally. And there's a reason we don't trust this rally. We have a breakdown, failure of support. And this is the first retracement of a breakdown, which will typically rally up into the old support zone and then roll over for another leg down. It'll typically come into a Fibonacci retracement. So I'm going to start up here at resistance and drop it down to support 1. And I'm actually going to drag it off to this candle right here. Okay, so I'm going from the resistance point, measuring to this leg down, to this drop. So what I'm measuring is the size of this drop right here. And it's very, very common to see it rally up to about 61.8%. That's your golden section, your main Fibonacci number. This coincides with this old support zone almost perfectly. So if I kind of go in here and just drop the line right in there, this general support zone right here, it does coincide. So this is your S&P index. Now, I want you to notice we have the exact same pattern occurring on the Dow. So here's your Dow. We have a consolidation, a breakdown, boom, a rally back out, which is suspect. And we would watch this again. Most technicians would sit back and watch for areas of possible resistance as prices rally out. And again, that's a little subjective trend line I'm drawing here, trying to get it to stick where I want. But again, old support tends to be a catalyst for new resistance. So I see it on the Dow. And I have the same pattern here on the NASDAQ composite, where we see a strong breakdown, boom, a rally out. And we're going to watch these support zones for the possibility of a slowdown and another rollover. So if you start to see a rollover, this is a great time to, one, exit any bullish trades in anticipation of the possibility of a rollover, or two, start legging into some bearish trades. And the thing about it is we could probably draw this little pattern here, this little breakdown pattern. For the Elliott wave fans out there, this would be a leg 1 down. Rally 2 out. This could end up being an A, B, C type pattern, or it could end up being a 1, 2, 3, 4, 5. Part of a bigger downward move. Now, we don't know that, and I don't know which way this market's going to head long term. My suspicions are bearish, but looking at this from a weekly perspective, just to kind of take the bullish counterpart, from a weekly perspective, let me go ahead and clean up the lines here. A lot of people would look at this as a bullish retracement and say, okay, we have a drop down, a buy signal, and the possibility that we could see this market run up. Now, it certainly could. I'm going to trade what I see, not what I believe, and I'm going to keep my eye on that. What I am watching for right now, however, on that daily chart, is I'm watching this rally to see where it's going to run out of gas. If it's going to run out of gas, if I see a rollover. And, I could drop that down into a 30-minute time frame here. And as of right now, it's showing a little bit of strength. So I'm going to keep my eye on it, and I'm just going to watch this. Let me bring in some history here. And, you know, again, this is showing a little bit of energy in this movement, but I will watch it at some of these key points here, and just keep my eye out for the possibility of areas where we could watch for support and resistance to form. And I'm going to watch some of these key points, old support zones, watch for some overhead resistance. We're just trading at that big fat number, 1300. It's a big number, technically speaking, so just keep your eye on it. Watch this for any confirmation to the downside to give you a clue that the bears might be running. Otherwise, good luck, good trading, and we'll catch up with you. We'll do an update on this later on in the week. Thanks.